Hello again, Craig here. Another freedom-based video. Last month I had a very strong showing on a video I did. In about 30 days time we got 80,000 views and about 2,000 new subscribers. So that seems to be a topic that people are very interested in. So we're going to cover that again this video, catering mainly to all those new viewers. But keep in mind, any new viewers, we do a lot of different topics. So we're going to do this one for you guys. See how interesting this is to people. I think it's going to be very interesting. During that video, because that's a lot of views for me, during that video there's like 4,000 comments. And a lot of people, we were arguing taxes as well. And I kept telling people that, well, about half of what you make goes to taxes. And people thought I was nuts. People said, well, no way, nobody's in that high a tax rate. Well, how much do you make to have to pay that much? Well, I'm here to tell you that, and here's a spoiler alert, we're going to show by the end of this video that you're probably more in the 65% tax bracket and don't even know it. But we're going to prove that to you, and we're going to do this graphically. But this is going to apply to the U.S. It's not going to apply to other countries, although most other countries of the world will have similar taxation structures, so it probably applies pretty much worldwide. But we're specifically working on the U.S. here. With all the numbers, I'm going to be throwing a lot of numbers and figures at you. All the descriptions and links to where I got these numbers from will be in the description box below. But what we're going to do is, if we find some mistakes, I welcome people to comment. If you find some mistakes I made, something that's a little gross enough to affect the final outcome, you need to comment and we can pin that information or put it in the description box. But in the description box will be a lot of links showing where I got all the numbers from that I'm going to be using. And I'm using averages from the U.S., from various sources. We're going to be using this for the graphic here. What we have here is 100 $1 bills, U.S. We don't really want to think of them as dollars yet at this point. We're going to think of this as percent. So there's 100% here. 100% is what we have. We're going to put them in this pile here. 100% in this pile. Now, next, we're going to start out with gross median annual income in the U.S. Now, I found numbers anywhere from 33,000 to 82,000, something like that. Wide range, don't know what numbers I can trust, so I went with numbers and I tried to take averages of all the things I found. We're going to go specifically with three sources: the Labor Department, the Census, and the Social Security Administration. Okay, those are the numbers we're going to be using. We're going to take averages of those because those don't even agree. Those vary between 44,000 and 58,000, so those don't even agree. So we're going to take an average of those, which puts us at a nice even 50%, or $50,000. $50,000 median annual individual income. Now, a lot of you are screaming, oh, I don't make anywhere near that. Well, I don't either, but a lot of people make a lot more than that. But that's the numbers we're going to use for this video. Yes, all your numbers will be a little bit different, but we're going to have to start somewhere. We have to use some type of averages. So we're using the average across the board, no matter what state you're in the U.S., and averaging everything. So those numbers. So we're going to start with that $50,000 a year annual individual income. Okay, now if you're in the bracket, $50,000, so anywhere between $35,000 and $85,000, you're going to have a 25% federal income tax. We're going to start taking off the things from this pile that you generally don't even see. Okay, so 25% of this 100% is, of course, 25 units, and I got 25 of them counted out here. I got a little paper clip on them. I've already pre-counted them to save some time. So there's 25% over here, leaves us with 75%. Right off the top, federal income tax. Next item, state and local income taxes. And that's the nationwide average on that is 9.9%. So we have 10 more of these counted out. 35% now in that pile already. Yep, nationwide average 9.9%. Next item, Social Security. Now, Social Security, you'll have to have an average there because, yes, most everybody contributes the same percentage. However, if you're self-employed, you would contribute a lot more. Your employer matches what you put in up to a certain amount. But anyway, if you take the average of both self-employed and employed, it's about 4.7%. So we're going to take 5 more units, 5 more percent, put them in this pile. Medicaid and Medicare is similar. When you factor in both employed and self-employed and you average it nationwide, it's about 1.66%. So we're going to put that in the pile there. Next is going to be a little difficult, property taxes. Property taxes aren't so much on percentage. What we have to do with property taxes, we have to take the average property tax in America. Yes, your property tax may be less, your property more. Oh, and by the way, if you're a renter, yes, you pay property taxes in your rent. The landlord isn't that nice to just pay it for you. No, it's rolled into your rent. So we all pay property taxes unless you don't have a place to live. But property tax, the average nationwide, because some houses are very expensive, some states have very low taxation rate. You got to start somewhere. So the average nationwide in property taxes is $2,100 or 4.5% of that $50,000, all the way up to $3,300, which is 6.6% of that $50,000. So in other words, I'm finding different numbers. But if we average those, we're going to give benefit of the doubt, and we're only going to say 5% of your $50,000, or 5% goes to property taxes. Okay. Now, next item. Next item is actually difficult. There's a whole lot of things that are like 1% or less that we pay. All right. Examples. Let's say fuel tax, for instance. Fuel tax, basically we pay 50 cents per gallon, roughly nationwide average, 50 cents per gallon on fuel taxes when you fill up at the pump, right, for gasoline. Diesel, you pay a lot more. But okay, let's say, again, we're averaging here, but it's about 50 cents a gallon. And if the nationwide average of how much you might drive, most of you drive, I travel, 13,500, my units are blowing away here, $13,500 miles a year, depending your male or female, that's average. Let's say your car gets 25 miles per gallon, then you're spending you're buying about 540 gallons per year, which comes to about $270 a year in fuel taxes, which is about 0.5% of that 50,000. It's very difficult. We have to have a starting place. But anyway, there's a whole lot of things, and other transportation costs, your vehicle registration, tolls, air taxes when you fly, inspections, parking meters, passports, your traffic fines. The list goes on. And if you're actually, and let's add to that list, we're going to lump in a lot of stuff that's like less than 1%. Licenses, such as your dog license, your hunting license, your fishing license, your permits, excise tax on comprehensive health insurance plans. Capital gains could be great if you have that. Some of us don't have it at all. That's capped at 15%. But we have to add all this stuff in. Estate taxes, gift taxes, inheritance taxes, the death tax. You may only have that once or so in your lifetime, or maybe not at all, but it's there. How about hotel taxes? That's pretty substantial, actually, if you look at your taxes on your hotel. Luxury taxes, things like phone, your 911 fees, your phone taxes, your maybe cigarettes and alcohol taxes you buy, if you're a smoker or drinker, your court fines, your schools, your libraries, if that's not rolled into your property taxes, electric bills, sewer, water taxes, IRA or early withdrawal, gun ownership, carry permits, environmental fees such as tire disposal, other environmental fees, zoning permits, building permits, well and septic permits, IRS interest penalties, tax upon tax, marriage license, and of course there's something called inflation. Well, it's hard to factor all these things, and some of these are very low as a percentage of your total income. So what we're going to do here, we're going to take 3 units, only 3, give you the benefit of the doubt, 3 units, and put them in this pile. I have to keep my pile from blowing around here. So that fortunately gives us a nice even 50-50. We have 50%, 50%. So already I've shown you you've already paid 50% of what you make in taxes. Roughly, no matter who you are, plus or minor, you pay about 50% of what you make in taxes. Average nationwide. So for all those of you who are arguing with me, well, there's your answer. You don't even have to go any farther. But, as they say, wait, there's more. We didn't talk about sales tax yet, did we? No, we didn't. Sales tax, state, county. Sometimes there's more. There's more than just state taxes, right? Sometimes there is, let's see here. Sometimes with state taxes there is county tax. Sometimes there's local tax or township tax. Sometimes there's a lot more than just sales tax for the state, because some states have no tax. But, for instance, Alaska, because I'm trying to think of some of the other states, Alabama, Ohio, Arizona, Alaska. There's a lot of states that have not just a sales tax, but they have, counties might have a tax imposed, and local cities might have a tax, and townships might have a tax. So there's other taxes rolled on it. So the nationwide average, what it really comes out down to be, is about 6%. Okay, 6%. But I can't really count off 6 units off this pile, because you've already lost a lot of money before you even got it. So that's, you can't really take the 6% off of that. So what we're going to do is we're going to assume this stack that's left, that let's say maybe about half of this you actually use to buy something which has a sales tax. In other words, when you pay your mortgage, there's no tax on the interest. A lot of times you buy food, there might be any tax on the food in some states. There might be interest, insurance, there might not be tax. Some things you buy won't have taxes on, sales tax on, right? So conservatively, let's just say half of the pile that's left. Let's say that of this, about half of it you actually pay sales tax on. So what we're going to do there, instead of saying 6% of this pile, we're going to say take half the pile, and we're going to say 3%. So we're going to put 3 more units in our pile here. Okay. Companies, that employers and companies actually pay a little bit more than half of what you pay. I'm sorry, pay about half and more. They pay more than half in their taxation rate. Not only do they match your Social Security, they may have state and federal unemployment insurance. They may have workman's compensation. They will have state and federal corporate taxes. They might have franchise taxes, licenses, fees and permits, inspections, import duties, taxes, interstate user diesel fuel tax, liquor licenses. They might have inventory taxes. They have a lot more taxes than even the individual. So, about half of what you buy has the taxes rolled in. Now, remember, there may not be sales tax on this, but the farmer who grew that tomato and the processor where the tomatoes got taken to, and the truck that took it there, and the truck that took it from the processor to the canner or the factory or the distributor, the warehouse, the wholesaler, the retailer, everybody along the way with this can of soup has to add the price of their taxes into the price of the soup. And that'd be true for a shoe. The farmer has to raise the leather, and the slaughterhouse, and the factory who makes this wrench. Well, they have to start with iron ore, so all the mines and the transportation of the ship, and manganese and lime and coke and all the things that go into this to make the steel of it alone, and then the process of steel. There's a whole lot of taxes rolled in, and we're going to make the bold assumption, because we can't be sure exactly what's. We're going to make the bold assumption of that 24,000 you had left, or I'm sorry, 24 units that you had left, that half of it went to taxes. You can argue with that number, but you see the point there. Everything you buy has the taxes rolled in. If they want to stay in business, they have to roll the taxes into this stuff. Otherwise, they can't stay in business. Now we are at, with this pile, we have 35% left in this pile. This is taxes you pay every year. This is what you have left, 35%. Now, here's what we can take of this 35%. Here's where we can convert it to make a little more sense to you in dollars. Because now we'll think of this as dollars. However, we started out with, if you consider each one of these $1 bills to be $1,000, a multiple of 1,000, that means we start out with $100,000. Well, let's have that, since 50,000 is what we are, the number we're using. When we now have it, we can have this amount, and that's what you have left. So you have left the 35%. You have 17,000. If you convert it to dollars and already have halved it, you have about $17,500 left. In other words, 35% or 34%, wherever we're at now, I'm not even actually, I think we're at 34%, 34 or 35% of $50,000 is about $17,500. So that's what you have left for everything you buy. You've paid about 65% of it in taxes. So, for those of you who argue with me all the time in the comment section when I call you how you're a socialist loving beep beep, maybe socialism isn't the right word. Maybe the proper word is communism. Yeah, communism. Linked below will be the 10 planks of the Communist Manifesto. And the second plank of that 10 planks of the Communist Manifesto is a heavy, progressive, graduated income tax. A heavy, progressive, or graduated income tax. Now, marginal tax rates that increase as income goes up is a graduated income tax. Sorry to say. And by the way, if you look at the rest of those 10 planks of the Communist Manifesto, we are a lot more communist, maybe, than we are socialist. Have a wonderful day.